It took 5 years for the compound impact of inflation to be felt by the average person. Now, when the average person after 5 years felt it, it was front and center in their consciousness. And if we don't tame the depreciation and the purchasing power of the Australian dollar and the US dollar, there will come a time when the compound impact of that on people's lifestyles will come front and center, the same way it did in the decade of the 70s. It takes time for people to forget good times. It takes time for people to forget bad times. That time hasn't happened. But unless we control inflation, and I don't know how we're going to do that, unless we control government spending.
Finance expert Rick Rule highlights the perils of artificially low interest rates. He warns that these policies, designed to benefit the poor, actually favor those with access to credit like himself. Rule predicts that without government intervention, interest rates could be significantly higher. Drawing parallels to the 1970s, he points out how unchecked government debt and deficits led to a drastic devaluation of the dollar, resulting in soaring inflation and eroding purchasing power. Urging viewers to take action, Rule advocates for divesting from cash amid looming economic uncertainties.
The circumstance in the United States that we're in, ostensibly this big government's supposed to benefit the poor, benefits me. Artificially low interest rates means, and I think our rates are artificially low. I think if the Fed wasn't involved in interest rates, that you'd see them 300 basis points higher.
Wow.
Artificially low interest rates benefit guys with access to credit like me. People who can get 30-year commercial fixed mortgages at 7%, where my cost of capital stays fixed for 30 years, but I can increase rents. These government policies are pernicious. In fact, they hurt everyone. But somebody in my position has the ability to fight back.
Right.
People who don't have a background in finance and people who don't have access to capital and credit have no way to fight back. So what you say is exactly true, Carrie. And what you say is important for a different reason. When I look back further to when I came into business, which is to say 1970, the hallmarks of inflation were already in place in 1970. In the United States, going back all the way to 1967, you could see, and I was in high school and I could see, that inflation was going to be a problem. It was obvious. We fought the war in Vietnam and lost. We forgot to pay for it. We borrowed. We fought the war on poverty. We lost that too.
Right.
And so in 1970, like in 2024, the government debt and the deficits were unsustainably high. Raising the interest rate was politically unpalatable, and raising taxes was politically unpalatable. The only way out of the difficulty was to reduce the net present value of the obligations by depreciating the dollar. Over the decade 1970 to 1980, we devalued the dollar in terms of purchasing power by 85%.
Really?
And the gold price responded, of course, after price controls, by going up, 30 times?
Wow.
But the important part of this is that although the hallmarks were in place, although the government debt and deficits were published as early as 1967, people had lived through 25 pretty benign years in the United States post-World War II. The stock market went up, the interest rate had been going down, the US dollar was doing well, eerily similar to the last 40 years. And despite the fact that people saw inflation, they thought about it as a subject that was taught in school. It took the period 1967 to 1972 for people to understand that inflation was real, that it was impacting their paycheck. The price of gas at the pump went from 20 cents a gallon to $1 a gallon. Hamburgers at McDonald's used to be 5 for $1, 20 cents a hamburger. Then all of a sudden they were 80 cents for a burger as opposed to $1 for 5. That type of thing. It took 5 years for the compound impact of inflation to be felt by the average person. Now, when the average person after 5 years felt it, it was front and center in their consciousness. And if we don't tame the depreciation and the purchasing power of the Australian dollar and the US dollar, there will come a time when the compound impact of that on people's lifestyles will come front and center the same way it did in the decade of the 70s. It takes time for people to forget good times. It takes time for people to forget bad times. That time hasn't happened. But unless we control inflation, and I don't know how we're going to do that, unless we control government spending.
Continuing the discussion, Rick Rule addresses skepticism about alternative reserve currencies like the BRICS, rejecting the idea of a BRICS currency due to distrust and the absence of a gold-backed system. He emphasizes the financial discipline of gold-backed currencies, highlighting central banks' increased gold purchases as a hedge against uncertainties and declining trust in the US dollar. Rule suggests that if Americans lose faith in their currency, it could drive a significant increase in gold demand, potentially leading to a surge in gold prices. With retail investors mostly absent from Western gold markets, Rule predicts that widespread distrust of America could offer a unique investment opportunity.
Of course, but I don't think that what most people think is going to happen is going to happen. The BRICS currency, I think, is a joke. My friend Doug Casey describes the US dollar as a who owes you nothing. And he says that an I owe you nothing. He says the euro is a who owes you nothing because there's 17 countries behind it. What in that case is the BRICS? They all have inconvertible currencies. As little as they trust the United States, they trust each other less.
Yeah.
Can you imagine if the Chinese sold the equivalent of $1 trillion worth of stuff to Russia and got paid in rubles? What could they buy for it? That's a lot of vodka.
But aren't they talking about having some sort of a gold-backed currency, and that's how they're going to do it?
They'll never do that.
Yeah.
They'll never do that. A gold-backed currency imposes financial discipline. It gives politicians less power. In your lifetime, Carrie, how many politicians have you known that were striving for less power? The answer to that is none.
Not
the
one.
idea that they would voluntarily relinquish power in order to improve the lives of their citizenry is pure fiction. Zimbabwe now is talking about a gold-backed currency, but they don't have any gold.
No.
What they're talking about is a gold-denominated currency. That's very different. Their currency would be redeemable in gold, just like the US currency was, until it became inconvenient. And then the redemption window would shut.
Yeah.
What will happen is that those countries will reduce the hegemony of the US dollar.
Okay.
The US dollar will become less important to the extent that the Chinese are willing to take rubles, which really is a function of how much natural gas, how much potash, and how much oil they'd like to buy. They will take rubles. To the extent that the Russians would like to buy cars and steel and computers and stuff, they'll take renminbi. But the idea that they will build up large amounts of the other's currency as a reserve currency is a non-starter.
Yeah.
I mean, it's absolutely a non-starter. Add back South Africa, which is broke.
Totally.
Yes, it'll have an impact, but not the impact that people think it'll have.
My
By the way, that's the reason why that's the reason why all those central banks are buying gold. They don't trust us meaning the United States, because we stole $300 billion worth of treasuries from the Russians, and because we weaponized the SWIFT banking system.
Yeah.
You know, the real enemy of the US dollar is located conveniently for Americans in Washington. It's us, not them.
Yeah.
But they still trust us more than they trust each other. And we have the deepest, most liquid, and most transparent securities market and currency market in the world. Those central banks are buying gold because they don't trust us and they don't trust each other. And I think that continues. When it comes to retail buying gold, by the way, retail buying in the West has been negative, which is to say there's been disintermediation, selling of ETFs in the United States and Europe until 17 days ago. The retail investor has been absent. When we get to the point, I should say if we get to the point in the 1970s, where Americans don't trust America either, in other words, where we don't want to save in US 10-year treasuries, then I think you'll see gold really take off. If you accompany central bank buying with retail buying, then a truly strange thing would happen to the gold price.
Thanks for joining us today as we delved into Rick Rule's insights on the economy and reserve currencies. Here's a quick recap. Rule highlighted the impact of artificially low interest rates, reminiscent of the 1970s, and discussed the potential shift in trust away from the US dollar towards gold-backed currencies. He emphasized the importance of understanding inflation's long-term effects and the implications for investors. Remember to subscribe to our channel for more valuable discussions and insights. Don't forget to like this video and share your thoughts in the comments below.